Welcome to the Senior Living Collective podcast. Today's podcast is going to specifically talk about having you as an adult child on your parents' checking account. And we're going to talk on some what are the benefits, the risks, and alternatives. I'm Bill Bamberg. I'm a senior living expert who's helped hundreds of families navigate the maze of aging. Many times there are events that drive this challenge, and we're here to provide support and ensure you are well informed for whatever may come your way. We'll bring on industry experts to help you with a variety of topics as it comes to aging, transitioning, and a lot of factors just involve you may not even be prepared to address, but it may come your way. So stay tuned, share it with a friend. Please like, subscribe, and comment. And we'd love to hear what other additional topics you would like for us to cover for you as well. So I'd like to start off with what are the risks? What are the benefits? In this episode, we really want to kind of talk about these things about having your parent on your checking account. And so it's going to be important to understand of the role and and the risks of what goes on here. So we're here to help you with that. So let's talk into that a little more detail. Now, of course, before we start, I do want to just bring some clarity that I am not an attorney here licensed in the state of Florida, nor am I a certified financial planner. I would strongly encourage if you have any questions as it relates to this topic and others, please speak to your local legal advisor. Hopefully, you have a family planning attorney or a estate planning attorney, as well as a financial advisor. Sometimes you don't need to have a whole lot of money to have either one of these two experts on your side, but it'll help preserve and protect the assets that you do have. And then what are your wishes and how they transition as you get older? So we want to talk about really the top three mistakes on being on a parent's checking account. And so I just did a recent property sale in which there were two siblings, or actually a niece and a nephew. Neither resided in the U.S. One did have a power of attorney, and so but they're outside of the U.S. So with that said, that kind of added that little trigger. And I have seen this before where it'll list the elderly person's name, and then it'll have two other names that'll be below it, which are people that have access to the account that can write those types of funds on that account. So so what are those things, and what does it mean, and what are the benefits? So let's get into that first. So the benefits are going to be simply just start with bill paying, right, and making sure that those necessary items like your utilities, your taxes, your homeowner policies, your lawn or pool service or HOA. One of the important things you want to be always aware of, because sometimes our parents own the home free and clear, and maybe property taxes come due, right? And so, how are those set up where those funds are dispersed or paid in a timely fashion? Same thing with homeowners policies. When they renew, how are those funds again paid for, and where that policy does not lapse? This is going to be a critical situation. I have run into this recently as well, in which the children are not even aware that the elderly parent, in which their homeowner policy had lapsed. And of course, there was a catastrophic issue. And so those repairs out of that home had to come from reserves that the parent had. HOA, so homeowners associations, again, those are things that are typically paid quarterly. But how do you stay on top of that on that aspect? The other is going to be really help you monitor spending habits. So, the tip number two is monitoring your loved ones or elderly parents' spending habits. Make sure the funds that they are spending on are to known sources or people. We know there's a strong urge for those to take advantage of the elderly and scams, and they're very easy to be swayed. So, again, this helps you have that peace of mind knowing that they are paying the right people. Funds aren't going out of the account, which they don't need to be. They should be targeting people that really they don't really have an explanation for, or they make large purchases that weren't something that you had seen typically before. The other would be to ensure they pay for caregivers. That's just, again, another support personnel. We kind of talked about, the lawn and pool folks, but there's also caregivers involved. So just making sure that they get paid, but they get paid on the right time frame and the amount agreed within their contract as well. Then, of course, emergency funds. Those are always important to have access to those. In the event something occurs, you need to have those types of funds available to settle any situations that may arise. So now we've covered just those three items. As far as the benefits of being on your parents' checking account, we talked about paying bills and utilities and homeowners policies, monitoring spending habits, making sure caregivers or support personnel are paid, and having access to community funds or emergency funds. Now, let's talk about the three risks that are involved with being on a parent's checking account and what that really means. So, for one, it's going to be loss of control. This is their account, these are their funds, so they no longer have 100% control of that account. Now they become what's called a joint owner, and so that joint person on that account, they do not need permission to write checks, withdraw funds, any of that. So they can do it without any understanding of what limits and how much funds can be withdrawn. The other is going to be debt vulnerability. And so, what does that mean? That means if you're an adult child and for a sad situation, maybe you become involved, named into a lawsuit, maybe a traffic accident or whatever it may be. You're named into that lawsuit. Well, those all your accounts are going to be uncovered, and part of that is going to be those assets that you're named jointly with your elderly parent. So that's a significant risk there. Also, if you have any debts, so if you're looking at maybe you're going through a divorce or you're going through bankruptcy, again, those debts that you have now become debts just as much on your parents' side because now you are both joint owners of that asset accounts. And so creditors, it just gives them an opportunity to be able to seize those funds if they see fit that what needs to happen there. Negative impact or risk of being on your parents' checking account is going to be what's called unexpected inheritance. And what that means is when funds typically when someone passes away, then those funds in a checking account will automatically transition over to who's that surviving person that's on that account. But what this can automatically do is potentially disinherit other family members. So that's important because that can cause some additional strife within the family. Another risk will be public assistance impact. So, if for some reason you're looking at maybe getting a college scholarship or type of funding of loans, which they require, and there's certain maybe financial thresholds, you may now be in a position of exceeding those because your parents' assets are far greater than that what would be required for you to provide to get that benefit. So that's just another important aspect. If you like what you're hearing and seeing on this podcast, I ask you just please comment, like, and share. Again, we're here to provide and be resource to you and your loved one. So we get that from getting the feedback from you of the programs we put out there, and we're here to make content that's going to be valuable and important to you. So please like and share and subscribe. So now let's talk about the three alternatives to being on a checking account for your parent. And so some alternatives would be you're actually could be what's called an authorized signer on the account. And this could be set up through the bank, but you're granted limited access. So it may be how much money can be actually taken out of that account in that fashion. So that's a nice alternative. Another benefit or alternative to um, being on the checking account is you can be what's called a beneficiary designation. And what this means is basically you only become a beneficiary until that loved one or parent passes away. Then those funds will actually transition automatically to you. Again, I'll speak to the key aspect here of speaking to your estate planning attorney and your financial advisor to make sure that you have all your ducks in a row the right way, and of course the way your loved one or mother and father would like it as well. One of the most powerful aspects of being an authorized person is what's given through what's called a power of attorney. And a power of attorney is a specific delegation with certain rights. It could be financial, It could be healthcare, and it provides certain stipulations of when you actually have the authority to make those decisions based on your loved one. So again, this is something that I would encourage, that a power of attorney would be something that would you would have in place, but those rights would only become available when only certain things occur. So it could be a hospitalization. It could be when you're put on certain forms of life support that's specifically described, and those types of things. So that's the other key benefit. So to wrap up this program, I just want to recap what we had talked about. And so we're referring to, as far as, the three mistakes of being on your parents' checking account, the risks, benefits, and alternatives. And so first we kind of talk about, the benefits of paying bills, making sure homeowners policies and HOAs, spending habits are monitoring, caregivers are paid, and of course access to emergency funds. The risks were really loss of control. Now you become a joint owner, so you don't need permission to spend money out of that account. The debt becomes vulnerable to lawsuits, debtors, and creditors may seize those funds. And of course, inheritance, so potentially disinheriting others that are in the family, and of course, could impact financial assistance in some way, and down the road. So it's important to look at all these variables as well as the alternatives that I talked about. Again, my name is Bill Bamrick, a senior living expert, here to provide you through the Senior Living Podcast those resources to help you become a more and better informed, whether you're an adult, child, or senior. We'll talk to you soon. Thanks again for watching.